In this tutorial, I'll be going through with you Alibaba stock. Type it in Google, paste enter. You can see the full name and the Nasdaq symbol BABA, and it's 162.22 US dollar for one stock, and it's a billion size firm. It's a big firm. It doesn't pay any dividend. Now, I just want to point out companies that pay dividend, that mean they are financially very strong. It's a positive sign because they're financially very strong. After paying their creditors, loans, liabilities, they still have extra money. That extra money pays to shareholders as dividend. So any firm that is paying dividend, even if it's less than 1%, that's a positive sign because they're financially strong. But this firm doesn't pay any dividend. It could be that they're not financially strong, or maybe they have extra money, they are financially strong, but they choose to reinvest in their firm instead of paying to shareholders. So some companies want to pay to their shareholders, some want to reinvest in their own business to further expand. So it's a choice that they make. So you need to find out why it's not paying dividend yield. Is it because they want to expand, or what's the reason behind it? So that's very important factor. Let's go to Wikipedia and see when was this founded. You can see that it was founded in 1999, 20 years ago. That's not a long period. And I want to see that, just copy this exactly from Google, see, check out the reviews in Indeed, and see what people who work there think about this firm, what's their thoughts on it. So I'll just paste it here, and company reviews, click enter. Okay, Alibaba, enter. I think it doesn't have any review in maybe Indeed review. I don't think it has any review there. So what I'll do is I'll check in Glassdoor, because we need to know what people who work there think about this firm. It has reviews in Glassdoor, yes, and 445 reviews, and it's 3.9 star. Please read through the pros and cons yourself. Check out the jobs listed, the salaries they're paying, the interview questions, the benefits they're giving, and the photos. Now let's go to Justia patent and see if this firm has any patents or not. So I'll just paste that exactly from Google. Nothing appears. I'll remove that part, back and enter. Let's see if it has patents. That's brilliant. So look at applicant or assignee, because these are people who have full rights of patents. In 2012 they have patent. 2012, a lot of patents in 2012. And any firm that has patent, that means they're very strong, because it's difficult to beat them because they're innovating, and they're very strong. And so that's a brilliant sign that they have patent. In 2013 they have patent. So please look for recent patents. Are they still innovating in 2015, 16, 17, 18? Because that means they're still innovating. So check out for recent patents as well. So there are a lot of pages. You need to go through it yourself and see, what patents they have. So they have a lot of patents. That's brilliant. Now, let's go to Yahoo Finance, and I'm interested in knowing what salaries key executives are getting. So I'll just paste there, and I will. So I'll click BABA, which is the Nasdaq symbol, and go to profile, and I can see the sector industry employees and that detail as well. And the part is that they have 5 key executives, but none of their salaries have been shown. That's very important for me, because why it's not shown? The salaries should be shown. It says not applicable. You need to find out why it's not applicable, because the more transparency we have in the salaries of key executives, the more trust we're able to build. So we need to know all the salaries, and if they haven't showed any, but you need to see or search why it's not applicable. That's a very important question. Let's go to macro trend and see. Go to price ratio, price book ratio, and let's just type in the symbol from Nasdaq BABA. I want to point out that if price book ratio is less than 1, that means that the stock is cheap, it's undervalued, and it's a discount, it's a sale. If it's less than 1, if it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it will get. Now it has, okay, I can see right now it's 4.63, which means somebody buys right now in August 2019, they'll be paying 4.6 times more money to buy this stock. It's 4.6 times more expensive. But people who bought in 2018 March, they bought it for 6.7 times more money. So they paid $183 to buy something that was $27 worth. But right now it's 4.6 times more expensive. And the most expensive, since we have data, was in 2014 December, when it was 10 times more expensive. So people paid $103 to buy something that was $10 worth or $9 worth. But right now it's 4.63 times expensive. Let's go to other ratio and check out the current ratio. If the current ratio is less than 1, that means stock is risky, and because liabilities are more than assets. If the current ratio is 1.5 or more than that, that means stock is safe. It has a good margin of safety. Look out for 1.5 or more than that. I can see that we have 1.3, which is less than 1.5. That means stock is risky. Let's look at the previous trend. So we only have information about March until March 2019. We don't have recent information of August right now, but sometimes the website takes time to load, so we need to wait for that. So we have information up till March, so we can see it's less than 1.5, so it's a risky stock. Let's look at the previous and see, has it ever been above 1.5? It has been above 1.5. So there are fluctuations. So since 2011 up till, I would say, since 2011 up till 2018 March, since 2011 up to 2018 March, since like nearly 7 years consistently, it has been a safe stock. It has been consistently above 1.5. That's brilliant. But recently in 2018 June up till now, it's less than 1.5, so it's a risky stock recently. Let's go and look in debt equity. This ratio will tell me if the company is mainly operating on debt or equity. I'm looking for 0.5 or less than that for it to be a very safe stock. And let's have a look. We don't have any data right now here. It has loaded here. No, it is loading actually. It hasn't loaded fully. So once it's loaded, then we'll know about this. Please let me know if you have any questions for me, or if you want to request me to make a particular stock or to do research on a particular stock. Please let me know as well. Okay, right now I can see that it's right now it's less than 0.5. That means it's a safe stock in terms of debt. Let's look at the previous trend. Has it ever been above 0.5? That's my question. So yes, it has been above 0.5 in 2013 March. Since 2013 March up till 2014 June, it's a risky stock because it has always been above 0.5. But since 2014 September up till now, since recent, I would say 5 years, consistently it has been below zero point 0.5. So it's since recent 5 years consistently, it's a safe stock in terms of debt. Let's go and look at return on equity. I'm looking for 8% or more than that. Let's have a look. Right now I'm looking for it's more than 8%. That's brilliant. That's brilliant return. Let's look at the previous trend. Has it ever been below 8%? That's my question. Since 2014 up till now, consistently it's 8% or more than that. That's brilliant return.